Vipin Khare is joining us now. He's Director of Research at William O'Neill. Vipin, great to have you with us here. Good morning. Thanks very much for your time. I don't know if you've been tracking India closely and the kind of price action we saw over Thursday and Friday, but what did you make of it if you were watching the screen? And what next in the very near term?
Good morning, Prashant. I think you summarized it pretty well. Most of the moving averages have been kind of broken. Volumes have moved up. I think the next 4-5% move is likely to be critical for the markets. Not only the move or the support, but I think how volumes play out. So if you see the markets drifting lower on higher volumes, then I think that is something to kind of watch out for. For us, every 0.2% move on the downside with volumes higher than the previous day is something we take note of. It doesn't happen very often, maybe twice or thrice in a month. But if that kind of bunches up, then that is a signal that markets are kind of turning cautious. So yes, it's been kind of sharp turnaround, but I think we'll get more indicators on what the market is likely to see based on how the next 4 or 5 percentage point move plays out. I mean, I just hope if it drips lower, the volumes are not as significant, because fall on high volumes is something we kind of really take very seriously.
Okay. Vipin, hi, good morning and greetings of the season to you and your entire team and William O'Neill. If the market does extend the downside, where do you see the leadership emerge on the downside? Will it come from banks, IT, Reliance? What are you looking at?
Yeah, so I think the market has already over the last month or so indicated where the interest is moving. Banks and financial services, some of the insurance plays, that is one place that has done well. Capital goods and defense stocks, they have kind of really turned around. They were places where value was emerging. And some of the consumer staple plays, these are the things that are kind of holding up well, or the setup looks good. Outside of that, if you look at the sector indices for India, most of the sector indices are either in correction or are under pressure. Nothing significant that stands out in terms of the sector being in an uptrend. So we'll look out for leaders in these limited groups. I think there's a lot to play here. Capital goods, defense, consumer names, banks, financial services, insurance. I think these will be the ones that will help lead the market out of this correction if they hold up.
Right. One of the themes of last year was the PSU banks. The index, give and take, everything is still up almost 56 odd percent. Having said that, in just the last couple of weeks, it's corrected about 16% from the highs at an index level. A lot of individual stocks down by almost 20-25 odd percent as well. Do you think that cyclical moves that we see on PSU banks is now over, or maybe this dip should be bought into?
So I think we'll wait for individual stocks to stabilize and give us some indicators before trying to preempt whether the dip should be bought into, because some of the PSU banks, the correction has been kind of pretty sharp over the last week or so. But it is interesting that you brought up PSU banks, because PSU stocks is one theme that has kind of really emerged over the last few months. There are some of the PSU stocks, even outside of banks, that trade below book value, that are kind of improving cash flows, reducing their debt, strengthening the balance sheet. Management is getting more investor savvy. So I think this is one area, even outside of banks, where there is a lot of value. And if those companies can really deliver what investors would like to see in terms of numbers or messaging, a lot of these places will be good places to hide if the market kind of turns volatile.
So you said that capital goods, defense are pockets that have started to perform now. But would you suggest staying away from the broader market for a bit, in India particularly, because of, just how vulnerable it's become now? I mean, the sell-off on Friday was pretty brutal. So even if you're looking at these pockets, is it better to just stick to the large caps now for a while?
Yeah, I think India is not doing anything dramatically different from the global markets. We look at 30, 40 markets worldwide. Most of the markets are either in an uptrend, under pressure, or correction. India has relatively held up really well. So yeah, as the market kind of catches up, gives up some of its outperformance, it'll be wise to either stick to leaders, the large caps, or just see the price volume action. That will kind of tell you where it is headed. I would not just go and buy the dip and preempt what the market will do, because next year could be pretty tricky. And a lot of what India does will be dependent on what global markets do. So be very specific, pick your stocks, do the due diligence, and then let the price volume action guide you. If they find support, if the setups look nice, then don't go all in. Just throw in a bid, throw in a hook, see how it performs. If it picks up, then increase your exposure. Otherwise, just come out. I think people will have to be really nimble, and they will have to be really flexible in terms of their picks or their exposure, because this is not a market where you will see a unidirectional move.
All right.
Be nimble and flexible. Well, that's good advice, not only for the stock markets, but life as well. Wish you a very happy new year, your team as well. Thank you so much for joining in. With that, we'll take a short break on the other side.